What's going on, guys? Ethan here. So it's been quite a while since I last posted a video, so this one's long overdue. So today what I wanted to talk about was why I took a break from day trading. And so we'll go ahead and jump right into it. So needless to say, your guy hasn't been doing too well on the day trade. So so needless to say, there's a lot that's happened between the last video I posted and this one. So during that stretch of time, I've blown up 2 brokerage accounts. Not super proud of it, but it's part of the learning process. And so today I wanted to tell you, kind of the things that led to that failure, some of the things that I learned from it, and hopefully you could take from that and learn as well and apply yourself if you're interested in day trading or any investing of any sort. And so hopefully you can get something out of that from my experience. So when I sat back and looked at it, there are really 2 things that came to mind of where I kind of messed up and got tripped up along the way. So I wrote a little list down here and some talking points that I got here, and I'll just kind of run down them. So really when it comes down to it, it came down to capital management, poor capital management, and poor emotional management. So real quick, going over the capital management. One thing that I'm not super proud of is taking off stop losses. I know, guys, this is terrible, but what would happen is the stock would be trending one way, right? And maybe it's going down a little bit. I'd have my stop loss, right? I'd be chilling. I'd be chilling if I just let it go. I'd sell out, I'd cut my losses, we'd be good. But I would, be like, oh, maybe it'll bounce back, and then I'll, take the stop loss off and then lose a bunch more money. And so that's the first thing. It's like one of those things where you look back and it's like, one thing that I definitely could have done better. Looking at the next thing was going all in. One habit that I would have is using the majority of my money in my trading account to take a position. It's not a super good idea, to say the least. I basically have enough money for one trade, and depending on how that turns out, I may or may not be able to make another trade, right? And it doesn't give me a whole lot of optionality when it comes to making more trades or recouping losses or adding more profits. And so that's something that I would, definitely stay away from. Another mistake that I made along the way goes in with the last thing that I was saying, was only trying to do this in 1 to 2 trades. So I'd, wait and try to have the perfect lineup or whatever, and I would try to make all of my money in 1 to 2 trades, mainly because I was concerned about the PDT rule. Well, I would be concerned about meeting that 3 trades within a 5-day business window, that I would try to focus on only making, 1 to 2 trades, and that'd be it, because I thought I'd be assigned the PDT rule. But as I came to find out, on the Robinhood platform, if you have a cash account there and that's all you do, you don't have margin or anything, you can get assigned the PDT rule. And that's because when you have those instant transactions and stuff, in a way, even though you're not signed up for margin, you're using their money in a way with that instant settlement and stuff to where you can get assigned the PDT rule. If you do something like TD Ameritrade, which is what I do, and you fund a purely cash account, you can make as many trades as you want because they don't do it in the same way that Robinhood does. So if it's a purely cash account on a platform like TD Ameritrade, and you have an account under $25,000, you can make as many trades as you want, as long as you don't run out of your cash for your settlement period for that to come back in. Of course, look at your platform and make sure, you read through and know how that works. This is not, any investment advice of any sort. So check that out. Know the rules and laws that govern your trading accounts. The next thing on my list was trying to catch bottoms and tops, right? All you got to do, only thing you got to do to make money investing is buy low, sell high, right? And I would try so hard to find the bottoms and find the tops where it became a scenario of diminishing returns, right? Maybe if I'm, at one point on the stock and I'm trying to get the peak, maybe that peak is only, you know, something very small. Maybe it's like 20 or 40 bucks, right? The difference there. And I'm just trying to get as, you know, squeeze as much as I can out of it. And it's silly. It's just silly, right? So one thing that I've learned is you're never going to catch the bottom. You're never going to catch the top, right? Just know that's not going to happen, and just do your best to, you know, do risk management and, you know, keep your positions clean. Another thing that I'm not super proud of is holding against reality. And this would be, you know, I'm just basically holding on to hope, right? That this stock goes up or goes down. I was trading options, so, you know, puts or calls, whatever. And, you know, the chart's going one way, but, you know, I have this belief, you know, I really know deep down, like this is going to go up, you know? No. Like, you know, it's a very bad habit to get into, no matter how much hoping or, you know, believing about the direction of a stock's going to go. At the end of the day, stock market does not care. It's going to do its own thing, and you have to just do your best to, you know, roll with the flow of it. One of the last things that go along the list that I've been outlining of poor capital management is not using what I call play money. And so play money is, I classify it as money that you can lose, right? It's not super important, and so you can do things like day trade with it or, you know, do stuff like that, right? It's about prioritizing your capital and setting yourself up to do well financially. I would take money that I earned and put it into my day trading account, not doing things that I should have been doing, like maxing out my Roth IRA or doing other things like that, putting this money towards you know, more stable things and expenses that I had going on, rather than just using it to just throw into the stock market and do my day trading with. I would also say that's probably one of the most important lessons that I've learned on this list of poor capital management is if you're just using play money, there's no you know, real concerns about losing it. Obviously you don't want to lose it, but it doesn't put you in a pinch or you know, kind of a hairy situation if you end up losing that money. You know, and it can relieve stress when you're trading, and you don't have to have that burden of like, oh man, you know, I can't lose this money. One habit that I had was wanting to trade just to trade, right? Maybe there wasn't a good setup or anything, but, you know, I'm a trader, right? I trade stocks. So what I do is, you know, just trade to trade. Maybe it's not a good setup or anything like that, like I said, but I just feel like I need to be making trades, you know, I don't know, to be called in like a stock trader or something. I don't know, something silly. But it's a bad habit because you're not looking for those really good opportunities. This is a really good and easy way to lose your capital, you know, and not be able to see when good opportunities come about and what those look like, and be in a position to take advantage of those, you know, opportunities. Right? Just because you don't trade doesn't mean you're not a, you know, stock trader or whatever. It's really a smart move, especially if you don't see a good setup or anything, right? It's pointless and not worth your time or money to put yourself in a position to possibly take on a losing trade when you very well, you know, could have not taken that position. So I guess the lesson of that is just patience and looking for a good clean setup rather than just trading to trade. All right, the next one is wanting to be right rather than profitable. Okay, the stock market doesn't care about your ego or anything like that, right? And so I would be more concerned about being right about the direction of the stock than making a profit, when at the end of the day, the profit's really the only thing that matters. And so when you're trading, and, you know, especially if you're a beginner and you're going through the motions, you got to just put your ego aside, right? I had to learn that the hard way. And so what I learned from that is you have to be able to look at the facts and be objective when it comes down to trading, because at the end of the day, the only thing that really matters is being able to make money, right? That's the whole point of why you're doing this thing. Now, this next one I've got good at or better at over time is letting trading affect the rest of your day. Now, when I first started trading, if I lost money that day, you know, it'd ruin the rest of my day. But over time of, you know, losing money, I was able to handle that more. But it's, you know, it's a really good thing to be able to not have that affect you. You know, and it really shouldn't, because it's not worth fretting over that and letting something like that, ruin the rest of your day. Sure, losing hundreds, thousands of dollars in a day sucks, but at the end of the day, it's not worth having, the stock market control your emotions. And so that's one thing that I had to learn is trading is your trading, and, it's kind of like a job. You go there, you do it, and you leave it there, right? You don't take it home with you, right? And if you let the trading affect the rest of your day, what else is it going to affect? What other situations will you be in where, a trade you make, a losing trade you make is going to affect the rest of your day to where you make other bad decisions because you're in that state of mind from that loss. And so that's one thing that, I've progressively gotten better at, but something that I definitely need to continue to work on. And definitely one of the better, one of the really strong principles on here that's really worth getting good at. Another thing in the poor emotional management category is not wanting to take a loss. And this is something this is probably one of the first things, you're gonna have losing days, right? You can't have the winning days without the losing days, the red days without the green days. So it's something that you really gotta start to wrap your head around. And it can be so hard, right? It's you have this money and you really don't want to lose any of it, right? Your goal is to make it grow and have more at the end of the day than what you started with. And so it can be a challenge to part with your money. But it's something that has taken me time to understand, because I used to come at this with a linear approach, right? Say I want to make $500 in the week. All right, Monday, $100, Tuesday, $100, Wednesday, $100, Thursday, $100, Friday, $100. Right? That's not how it works. Maybe Monday you make $500, Tuesday you lose $300, Wednesday you make it back, Thursday you lose it all, Friday you make $500. So at the end of the week you made $500, but it's not a very linear pattern, right? You're not making a consistent amount every day. Overall, it might add up to that, but it's not going to be a super, steady, consistent, especially in the green. Hopefully it's in the green, but over the long term, you're looking for that higher average, right? And so there will be losing days, there will be green days, but what you have to focus on is at the very end, right? And so you can't take a super linear thinking approach when it comes down to profits and stuff, right? Because there's going to be days you make money, days you lose money, but the hope is that at the end of the week, they average out and you make your weekly profit goal. Another thing that I could have worked on is not having this mentality of waiting for this one setup, right? It's let me just let this one run, I'll make X amount of money and then I'll be good, right? I just need one winner to really set this up, and maybe this is the one, I'm in a trade and it's this is the one, just let me have this one. And that's a poor mentality to have when it comes to trading, because again, you're going back to one of those earlier principles that I was talking about, is changing the narrative relative to the facts, right? We have to be objective as traders, and you want that setup to come to you. You don't want to go to it, right? It's about being patient and finding that perfect setup, and not having that hope or, that belief that it's really going to just do it for you. But looking at it objectively, looking for the setup, and, making a profit. But the main idea is that this is not a get-rich-quick thing. This takes patience. This takes, studying. This takes experience. This takes money, to become a profitable trader. And so because of all those reasons, guys, I'm going to be taking a break from trading. By no means am I done. One of the things that I find, so attractive about trading is that it gives you the opportunity to make money independent, right? So you're not reliant on being employed or anything. It's you can do this from wherever. And so that's super attractive, right? It gives you a lot of freedom and a lot of optionality when it comes to your living situation and being able to move around. And so it's definitely something that I'm going to be working on. And so in the meantime, I'm going to be reading books, getting better. I'm going to be doing paper trading and on-demand trading, practicing, getting better at those, so that when I do come back in with real money, I can do better. And it's going to be practicing, good practices, good principles, and really putting in, a sacred effort in being able to become a profitable trader, being patient, all that good stuff, guys. Right, and of course, building up capital and going back to that play money, principle that I had is I'm going to be focusing on putting my money that I make into, prioritizing that money in my investments, maxing out my Roth IRA, doing things like that are going to set me up over the long term. And then anything that I make on top of it, that'll be my play money. That's what I can use for trading. So at the end of the day, guys, we're all human. We make mistakes. The thing is to learn from them and use those mistakes to propel you forward, into your next realm of success. My hope is that this video doesn't discourage you in any way from trading, but it gives you, a good background or basis of things to learn from my mistakes, right? And be successful. That's what I want for you guys, is for you to be successful. All right, guys, that's going to do it for this video. Thank you so much for watching to the end. I really appreciate it. If you like this video, give it a big old thumbs up, subscribe to the channel if you haven't already, and I'll see you guys next time.